Crashing iron ore recession. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because I'm starting to notice more and more articles appear just discussing the crashing iron ore price and implications of trade issues or relationship issues with China and Australia, really exacerbating the supposed threat that China poses to Australia, and that this plunging iron ore price on a global scale is a direct attack on our country. So I thought I would have a look and ask the question, are we looking at an iron ore fueled recession if the prices continue to fall? So let's jump here and have a look at a piece from HeiseSays. So, fears continue to stir over plunging iron ore prices as they fell to $145.50 USD a ton, down from over $190 at the beginning of the month. So that's a pretty significant fall. Will the plunging iron ore price drive Australia's resource and export dependent economy into recession? Concerns that plunging iron ore prices and reduced export demand could drive Australia into a recession are not unfounded, as the latest GDP figures were dragged down 0.7% by declining exports of goods and services, of which 3.7% was due to falls in mineral ores. While a fall of 0.7% might not seem significant, Australia's GDP only grew by 0.7% during the June quarter, with a significant portion of that suspected to be the result of our government purchasing vaccines. And we can see that here. That's a little blue square here in this ABS chart, everyone. Australia is the second largest exporter of iron ore in the world, exporting over 54% of the world's iron ore, followed by Brazil at just 18.5%, then South Africa at 5.41%, according to OECD data from 2019. And if anything, Brazil's challenges with the recent dam burst have increased Australia's exports. China's demand for Australia's iron ore is insatiable, consuming over 80% of our iron ore exports. Australia's economy is significantly dependent on iron ore exports. 24% of the West Australian government revenue was from iron ore in 2019-2020 alone. As such, any potential threat to our ongoing export relationship with China is concerning. Tensions between China and Australia continue to worsen, with the Global Times reporting on the 18th of May that Chinese Foreign Ministry spokesperson Zhao Linjiang said that the Australian government needed to listen to rational voices and abandon its Cold War mentality and ideological prejudice. Now, we have to understand that the Global Times is, considered by many a CCP mouthpiece. Trade tensions between China and Australia are also growing as the list of tariffs on Australian goods gets longer, making alternative sources more attractive, with the Global Times also reporting that Australia shipped more beef to China than the US until April. In May, the pattern reversed, and the US sold 90 million of frozen beef to China, nearly twice the amount of Australian sales. While the Global Times is attempting to paint this as a betrayal between allies, we must remember that the Australian beef cattle herd is still recovering. China also suspended imports from 6 Australian beef suppliers, as reported by 9 News on the 8th of December 2020, which undoubtedly played a part in reducing exports. The Department of Agriculture even predicted a fall in export earnings back in 2019, as both our herd and flock rebuild, with prices to remain high due to demand from China. And we're seeing our herd and flock rebuild, and prices for beef are quite high. And well, if prices are high, and I will bring up the commodity from Trading Economics right now, bear with me, it's loading up. And while prices remain high, it means US beef is going to be more attractive. We have a look here, coffee, the most important resource in the world. Maybe I'm a bit biased. Now it's at $20.04. That's pretty high, everyone. And if we zoom out to 10 years, we can appreciate how significant that is. So, with plunging iron ore prices, escalating trade and political tensions with China, Is it time to sell all of our iron ore stocks in fear and run from the market with tails between our legs? Let's have a look at some of the larger iron ore listed companies on the Australian Stock Exchange. And I'm bringing this up directly from my website because it just formats a bit nicer. Now we can see here we've got Rio Tinto. Now I've ordered these by the beta. Now the beta is to do with the volatility of the share. The lower it is, the less volatile it's meant to be. And the higher it is, well, the more volatile it is. So if we have a look here, you've got Rio Tinto at $108. Their market cap is $166 billion. They've got a slight change, over 47,000 employees and a P/E of 7.30. Mount Gibson Iron Limited. Now their market cap is only $677 million, but their beta is at 0.63. There you go. They've only 355 employees. I thought it's a bit interesting to arrange it by this rather than P/E, rather than market cap. But their P/E is 10.44. Fortescue, everyone's favorite at the moment because of the nice, big, fat, juicy dividend that they're paying because of their crazy profits. They're sitting at $20.71 when I got this data. Their market cap is $65 billion with change, and they've got over 10,000 employees, a P/E of 4.57, and a beta of 0.67. So they're still reasonably stable. When we go all the way down to Champion Iron Ore Limited, they're $5.69, and you can see they're only just a paltry nearly $3 billion. And they don't list their employees, but their P/E is 5.62, and their beta is quite high at 1.87. So with that in mind, everyone, it doesn't look like any of them are in trouble. The recent performance of listed iron ore companies remains strong. We've seen that. With reports of massive profits and generous dividends, combined with recent experience that our government will take steps to support the economy, fears of a recession may prove unfounded. We've already seen that, well, even if the previous quarter that we've just had didn't have the supposed government spending of the vaccines, which estimates to be about 0.4% of the GDP growth that we had, we still may have just avoided a recession. Now, that's ignoring the fact that the government is racking up significant debt, everyone, as we can see here. Sadly, that's the future generations issue that they have to deal with, everyone. While the growing animosity from China may simply be flamed by the media, while also encouraging exporters to explore new markets. This is one issue that we have. The media really tends to work it up. For the time being, at least, perhaps practicing some patience would be the wiser virtue. And you can find the sources and references to this on my website. So what's the solution and takeaway to this? Let's jump on my soapbox. Well, we're seeing here more and more of these articles appear in the media. One's either discussing a recession or the threat that China poses to Australia and the iron ore sector. I suspect a lot of it is done to generate clicks and views. Iron ore is a big part of our economy, particularly Western Australia. It employs a lot of people, and that has a flow-through effect to all parts of the economy. Remember, you're watching a YouTuber here who's an architect, and some of the biggest mine jobs here in Queensland, the big Bechtel mines that we worked on, helped me start my business and helped me, build a house. Although building a house, have a family. And this shows you that the trickle-down effect works. Evidence right before you. So I think we need to be skeptical whenever we're presented with these articles. There is a push to generate animosity between Australia and China, to use it for political purposes, to generate, votes. That's something we need to be concerned about. And from both sides, as much here in Australia as much from China. What do you think, everyone? Are you concerned that we may be facing a recession? If not this quarter, the quarter after? Are you worried about iron ore prices falling? We're sitting at $145 with change. But our government's budget is only estimated or based on $50 USD iron ore. If you invested in some of these iron ore projects, if you had have jumped in back when the market crashed last year, when the fear was pushing people away and people were selling and getting out and thinking it was all coming to an end, because it's all we were hearing in the media, I guess it's just exposure, and you've got to train yourself to understand and deal with those situations. Probably not go along with the ride. Easier said than done. Anyway, guys, thank you all for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions. And if you enjoy me writing some actual written pieces, would you prefer that I start doing those as well as just reviewing the news? I appreciate your feedback. Take care, guys. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time. Bye for now.